Good morning, ladies and gentlemen, and thank you for joining today's Aspermont Q1 Investor Update. We're holding this call today to release our Q4 results as part of our commitment to providing transparency to our investors. Given our current momentum, we're excited to share these results with you. I will begin with a brief presentation to update you on our progress against the key growth initiatives we set last year. Afterwards, we will open the floor for questions. If you have any difficulty following the slides, please refer to our recent ASX announcement, where the full presentation deck is available. Aspermont has an 189-year publishing history and collectively 580 years of brand heritage across our 11 primary brands. We are the largest B2B media organization serving the global resource sectors, supported by over 100 independent journalists and analysts worldwide. Over the past 8 years, Aspermont has undertaken a full-scale business model transformation, resulting in 33 consecutive quarters of growth in subscriptions, our primary revenue stream. Over the last 2 years, we have been reshaping our product portfolio to maximize high recurring revenue businesses while investing free cash flow to build a new data business. We have laid the foundations for sustained growth and profitability, and Aspermont is now at an inflection point. At the end of the first half, we told investors that the business would return to revenue growth and profitability in the second half, and that we would balance cash reserves with our inward investment program. Today, we are pleased to tell investors that the business has done exactly that. Q4 is our 33rd consecutive quarter of growth in subscriptions revenues, ARR, and ARPU. Quite simply, we are at an inflection point because the investments we have made over the last few years are now coming towards commercialization. Our new data products will drive significant improvements in ARR, gross margins, and net margins over the next few years. At the end of the first half, we also mentioned that subscriptions, which achieved 2% growth, would gain new momentum in the second half. Closing the year with a 7% growth in ARR compared to the previous year demonstrates that this new momentum is coming through. Let me recap for people who are new on the line today. Aspermont operates a simple, effective business model. We produce high quality, independent content for the industries we serve, ranging from news and editorial to research, data, and market intelligence. All our content is paywalled, and we charge subscription fees based on the number of members and the type of content provided to each customer. Our content has been trusted and monetized for nearly 200 years. 10 years ago, 8% of our revenue came from subscriptions. Today, that figure is 55%. Since FY16, we have achieved a 12% compound annual growth rate in subscriptions revenues over 33 consecutive quarters, while maintaining a near 100% net retention rate. Subscriptions is a high quality business with, today, 3 million engaged users and 5,000 current corporate subscribers, and still with substantial growth potential. Aspermont's business model has proved resilient, regardless of global resource sector cycles. We have achieved a 17% growth in product prices because our customers extend the range of products they purchase, and they also increase the numbers per subscription. As almost all our products are now digital, gross margins are scaling accordingly. We expect further growth in average revenue per unit as we launch new data and intelligence products. Aspermont has only scratched the surface of its market potential. Today, our 5,000 corporate subscriptions generate $11 million in annual recurring revenue. But the total addressable market for mining corporate subscriptions alone is potentially 180 million in ARR. And that figure assumes constant average revenue per unit. As we have shown, our ARPU is in fact growing by nearly 20% per year, and we are not reliant on a few large accounts. Growth is spread across the entire subscriber base. Aspermont operates globally across the mining, energy, and agriculture sectors, deriving revenues from subscriptions, live events, advertising, and marketing services. But our growth strategies focus heavily on mining corporate subscriptions. To grow mining corporate subscriptions, we will increase coverage with more writers in more regions and industry segments, leverage our technology to optimize customer acquisition and customer engagement, and extend our outbound marketing campaigns to new jurisdictions. Our numbers of writers and analysts has grown cautiously over the last few years as we balance cash flow and investment. The ROI on new content providers is roughly 6 months, and as the business's profitability increases, so will the number of our content providers. We have made tremendous improvements in customer acquisition and engagement performance through prior technological advancements. Our Horizon platform, first released 8 years ago, has enabled our current growth path. Earlier this year, we announced that all of our brands are now moving on to version 5 of this platform, and that is starting to make an impact. Equally, the evolution of our processes is benefiting from new knowledge capital brought into the business through our recent senior leadership personnel investments. To date, Aspermont has done very little outbound marketing for its brands, relying instead on our existing database to drive new business acquisitions. Going forward, we are committed to significantly raising our marketing activities. Currently, the marketing team is trialing ROI performance on various initiatives, and by the end of the first half of FY25, we expect our new strategies to have settled and begun to bear fruit. Our strategy to increase account penetration and average revenue per unit applies account-based marketing techniques to expand the number of members per subscription through upselling and cross-selling with annual rate card increases to reflect the growing quality of our offerings. In 2016, only 2 clients paid more than $8,000 in subscriptions fees. Today, nearly 100 clients pay more than that annually. Our highest paying client today spends almost $200,000 in annual subscription fees. We are making good progress. Our R&D and new product strategy focuses on game-changing innovations. We will target new geographies and offer multilingual services to expand our user base with these new products. And by developing higher value data and intelligence products, we will significantly increase subscription pricing. Our immediate focus is on the North American market, where we are building marketing tools to boost penetration. We already have a well-received product portfolio in this region, and our outreach efforts should yield short-term positive impacts. From a cost perspective, we expect a 3-month lag in ROI from marketing spends related to new customer acquisition. So these activities are being prioritized. We have previously informed investors about our multilingual ambitions and the upcoming project Esperanto, especially because only 25% of the world's population speaks English. But given the rapid advancement of ChatGPT, we have paused our efforts on Esperanto to see what we can freely leverage from these pioneering tools first. Over the past 2 years, we have heavily invested in our data and intelligence teams, platforms, and research. Our focus is on data origination rather than aggregating or building competitive products from existing data. This approach capitalizes on our unique relationships and contacts within the global mining industry, providing us with a greenfield opportunity to monopolize high-value data sets that only we can produce. Achieving success in any one of these three areas would drive transformative growth for Aspermont. We intend to succeed in all three. We are making considerable progress against our growth strategies. First, we have partnered with a new marketing agency to supplement our operational capacity and technical expertise. Second, we are developing 2 new data products for launch near term. The mining journal Project Pipeline Index has been a popular research tool for some years, and its new data product extension is already attracting pre-launch sales at more than 15 times our current average revenue per unit. Our mining journal ESG index is also set to launch this quarter and has exciting potential for a multiplicity of products and pricing tiers. We are ranking the top 50 mining companies by 36 E, S, and G variables. This will enable us to collect unique and valuable market data. Lastly, we are evaluating a new mobile phone-based geofencing marketing solution, initially targeting the patrons of large US mining exhibitions. If the pilot succeeds, it has the potential to develop a significant new market. For the first time in Aspermont's history, subscriptions now contribute over 50% of the total revenue, and our subscribers maintain a near 100% net retention rate. Powerful brands, a top-tier management team, recognized leadership in B2B media for the mining sector position our company well for sustained growth. And Aspermont has proved that growth potential over 33 consecutive quarters. After spending 2 years investing in new personnel and the data and intelligence division, Aspermont is at an inflection point. As a series of new data products are released, our annual recurring growth and average revenue per unit will step change. As we told investors at the end of the first half, we have returned to profitability while balancing our inward investment with our cash reserves to upgrade revenue quality. The next few years should be an exciting time for Aspermont and our shareholders. Thank you for your attention, and we will now take any questions. Okay. First question. How much did you spend on additional growth investments in the second half of FY24? And how much do you expect to spend in FY25? Overall, in FY24, we've spent about $1.5 million, a mixture of data, intelligence, and research initiatives, a combination of OPEX and CAPEX. Our expectation is we'll spend roughly the same amount next year. Second question here relates to a slide in the deck, might be worth pulling up. Nadia, could you pull up slide 8, please? The question is, what milestones would you set for market share growth based on the 6% and the size of the total addressable market? Good question. Yes, so at the moment, we have 5,000 mining corporate subscriptions that equates to $11 million of annual recurring revenue. The total addressable market we have is 80,000. If we had the whole of that market, obviously it would be a $180 million annual recurring revenue opportunity, notwithstanding pricing increases on an annual basis, as we discussed in the presentation. Obviously, to have a strategy to go from 5,000 to 80,000 is too vast. So we're breaking this down into different cohorts. Specifically at the moment, over the next 18 months, we're looking at how we grow the figure, firstly by 500 and then by 2,000. So we've identified the highest likely opportunity subscription or subscribers for us. But we're also looking at different cohort analysis now. So it's not simply a case of looking at how many new subscribers can we put on. We've analyzed different subscription group cohorts within inside of our business to see which ones take up more products and services and develop higher levels of average revenue per unit. Unsurprisingly, I'm sure for most people, we have realized that the largest mining companies themselves by market capitalization are becoming the largest spending subscription accounts of ours. So in terms of our targeting and how we're moving those 5,000 accounts upwards, our first step is really specifically to target all mining companies that have got more than a $1 billion market cap. But equally, our wider marketing campaigns and outreach will drive other companies within inside of the 75,000 total addressable market that we currently don't have. What are the opportunities across the group for new data products, and how are you going to commercialize them? Another good question. So Aspermont has the potential to be a data originator. And what we mean by that is because we have an engaged relationship with our subscription base, they know our brands, they read our services. We have an opportunity to actually speak to segments, persona within inside of our subscription space. Let's say mine managers in Australia, and speak to all the mine managers in Australia, and I'd say to them, listen, what data products do you use on a day-to-day basis? Where are their gaps? Where are their inadequacies? If we were to fill that gap or that inadequacy and build a data product specifically for you along those lines, what would it mean for you and what would you pay for it? So we have an ability to originate specific and niche data for different customer segments within inside of our audience. That's what we call pull data. However, to begin with, the next 18 months, most of our data products are going to be push data. So they're going to be products that we believe the market will want because they don't already have them at the moment. Most of these will leverage off our existing research reports. So in the presentation, I discussed the Project Pipeline Index. That is a research report where we currently rank all the listed mining projects in the world that have an economic study, so anything with a scoping study and above, against a variety of different criteria. We rank those projects and produce an annual ranking study on them, turning that into a real-time data product, almost, if you will, a sort of a Moody's style ratings agency product. We think has got big opportunity, and we've already seen one of our largest clients come in and buy the data set behind that for a pretty significant fee. Secondly, our ESG index, that will start as a research report this quarter and then become a data product. Likewise, our world risk report, which has been around for a number of years, That is going to become a data visualization product. So those are the push products that will leverage off what we produce existing from the research perspective, and then the pull products will come as we survey and analyze our customers more. In terms of how we commercialize them, these data products will be on 12-month subscription bases. So in the same way, that we commercialize all of our other content. The difference, and the key difference, is that the pricing of these products will be significantly higher, but probably the target market, the niche within inside of our markets, will also be slightly lower. That's empirically exactly how we're going to price them is something we're going to feel our way within the market, because there are no benchmarks for them. And different types of data products will probably, or different versions of the same data product, are likely to have different pricing points. For example, is it data that's being updated on a quarterly basis, on a monthly basis, on a real-time basis? And there'll be different price tierings for the frequency of that data, not just the type of data itself. The next question I have here is, how much pricing power do you have given average revenue per unit growth has been strong? What are the competitive offerings priced at? Well, this sort of leans into the question we've just had around data. Our average revenue per unit has compound grown at 17% per year for the last 33 consecutive quarters. Actually, in the last couple of years, it's been accelerating. Close to the last couple of years, been closer to about 20%. With the oncoming stream of data and intelligence products that we're going to release, we believe that we've got every opportunity to maintain that growth in average revenue per unit, that rate, and if not exceed it. Also, because our marketing is going to become more targeted now. Up until this point, we talked about account-based marketing techniques, and that's something that we've applied similar techniques across all of our accounts. As I said earlier, we're now going to be a lot more targeted, particularly around those mining companies that have more than $1 billion of market cap, as we expect that we're going to be able to grow the number of seats, the number of members per subscription in those more vividly and more effectively than we will do in some of the others. So that also is going to drive average revenues per unit. In terms of what our competitive offerings priced at, I mean, we have adjacent competitors. In terms of news, information, editorial, there are other services out there globally, although they operate on a regional basis. So one or two others in Australia, one or two others in Canada, and a few other places. Their subscriptions are already, if they have them, most of them are free to air services. Some have very small subscriptions prices, maybe $100 or $200. Our average revenue per unit is already $2,000. So we're a lot more expensive those services, and that reflects the quality of the journalism, of the analysis, and of the content that we produce. In terms of the data side, as I said, because we're going to be originating data and not simply trying to do data better than somebody else, we could, as an organization like Aspermont, given our position with brands like Mining Journal, we could look at commodity pricing, actually having a Mining Journal price for a variety of different commodities. But in general, a lot of the key commodities are highly competitive grounds already. There are obviously other commodity groups that don't have benchmark pricing, and those are areas that we might look to. But because we're going to be originating unique data, there aren't really that many competitive pricing benchmarks for us to assess ourselves by. I mean, I can tell you that simply the data sets that we are selling for our Mining Journal Project Pipeline Index is more expensive than an entire Bloomberg terminal. So that's probably the proxies that we're looking at. But we're interested in producing the type of data that could be sold at north of $50,000 per license. That's the game we want to get to. So again, when we look at our average revenue per unit right now being $2,000, to move into pricing areas at $50,000, we think will drive ARPU for a long time to come. Looks like we've got one final question here. What is the outlook for the events business, and what is the strategy to maximize earnings here? Very good question. We've been in events for a long time. Aspermont has been associated with events for a long time. We're not leaving events. We don't focus on it in our presentation. We didn't focus much on marketing agency either. But these are areas obviously that drive 45% of our income at the moment. In terms of events, we are certainly making a strategic change this year. Events are a core part of our content offering. In order for Aspermont to own the platform globally for the mining sector, and be the discussion forum for debate, and the 365-day always-on platform via digital face-to-face for that conversation in mining, which is very much our mission. Events is a key part of the mix, but what we're focused on now is working with central and regional governments in 1 or 2 locations to make big events, as opposed to having a large number or a higher volume of events scattered across the globe that are, from an operational capacity perspective, quite consuming and have a reduced margin, and also slightly oversaturate our customer base with the amount of things that we're asking them to join us on. Our event, Future of Mining in Perth, has grown particularly well. In the first year, we had 600 attendees. It moved up to 1,000 attendees. Last year was 1,500 attendees. So that event, partnered by the West Australian government and others, gives us a great opportunity to really try and break the seams and move that into a 2,000 to 3,000 person event. Once we get to that type of scale, the margin moves pretty quickly. Right now, the gross profit margin for our existing event is probably around 50%. Once we start to add another 1,000 people on top, with all of the sponsorship opportunities and everything come with it, it can start to move to about 70, 75%. That'd be our target gross profit margin for those products. We are focused on events as free cash flow assets. We want to get 1 or 2 events up to $3 to $5 million of turnover at that 70 to 75% gross margins to throw off high amounts of cash flow that we can use some of to reinvest in building the event bigger, but the large proportion of to actually put back into the other side of the business to really drive our proposition on the subscription side. So that's essentially the outlook for the events business. Will be that, you know, we expect to do Future of Mining Perth next year with our Mining News Selects show integrated with inside of it, which is our mining finance show. We obviously have a great partnership with Rick Rule that we're really excited about and looking forward to develop further. And equally, Future of Mining in Asia. We had a very good launch event this year. There were 15 trade delegations and ministers from Southeast Asian countries. It was an excellent launch platform for us to build a large-scale event in Singapore for that Southeast Asian region. And in the fullness of time, with the success of the Future of Mining brand within those locations, we'll also look to wrap in our other sectors: energy and agriculture, Future of Energy, Future of Agriculture, and look to create Primary Resources Week. Okay, that looks like all the questions that we have so far today. So perhaps we'll wrap up. We'll wrap up the call here. Let me just recap things in order to summarize where we are. So as I said, for the first time in Aspermont's history, subscriptions contribute over 50% of the total revenue, and our subscribers maintain a near 100% net retention rate. Powerful brands, a top-tier management team, recognized leadership in B2B media for the mining sector position our company well for sustained growth. And Aspermont has proved that growth potential over 33 consecutive quarters. As we told investors at the end of the first half, we have returned to profitability while balancing our inward investments with our cash reserves to upgrade revenue quality. And we hope to have an exciting next few years, both for the company and for our shareholders. Thank you very much for attending today's webinar. We will have a recording of this posted onto the ASX and onto the Aspermont website in the next day or so. Thank you for your time.